Everybody. I'm sorry to have come between you and your networking break, but I think now that you have had a couple of beers, probably you'll pay more attention. Great. So I think we have heard so much of cool and fancy stuff so far. So I'm going to take you back a little bit into the reality. A reality where we actually transact currently with the banking sector. So let me start by introducing myself. I'm Harisha. I head up payments at Synthesis. Synthesis is a software development consulting company. It's a JSE listed company based out of South Africa. And we do a lot of cool stuff for banks, fintechs, like my fellow colleague here, Ozo, and Reserve Bank. So we work with Reserve Bank banks and work in the mainstream payment technology. So I'll be talking more about the vision of payments from a mainstream perspective. You've all heard the cool and fancy stuff already, so don't expect anything fancy from me. So when we can make payments so easier for this lady here, that's the goal for us. The goal is when she feels happy, when she's making payment, just with the tap of a watch. That's the goal for us. To go in the future, I think we need to go in past. So I'm going to take you back and just put your imagination hat on. I want to take you back to year 2007. And let's go to Kenya, because I think my expert introduced us to Kenya and Uganda. So let's go to Kenya. And let's imagine that three friends in Kenya sitting drinking Tusker beer. And now it's time to settle the bill. And the bar only accepts cash payments. And one of them is carrying the cash while the other's not carrying the cash. That's way back in 2007, right? Now you need to settle the bill. So the one person who's carrying the cash is settling the bill, and while this person carrying the cash is settling the bill and getting the change back, the other person is actually already transacting in M-Pesa and settling it for his spend. So he has the money in real time in his account while the cash is still transacting, while the cash is still happening. And now, let's go to United States. We all hear so cool things about US. The Western world has figured it out all. But let's get the reality. Let's get the fact check. Same year, same two people, one carrying cash, one not carrying cash. We are in New York, and we are hungry, and we just want to grab something from the cart. The one carrying the cash has to foot the bill for that lunch, and to settle that tab, the one who's not carrying the cash has to go to ATM, withdraw the money out, have to pay the hefty fees of ATM, and has to then, 2 days later maybe, when he meets the friend again, settle the tab. So US hasn't figured it all out. And this is 2007. Today I was just checking my LinkedIn, and I saw a post. One of my friend who was doing a tour of United States, he lost his phone. He lost his wallet, and he wrote a beautiful LinkedIn post stating that how did he manage. So it was all hunky dory up until Apple Pay and Google Pay was working everywhere. But then now the Apple Pay and Google Pay only works when somebody brings a POS machine, the point of sale device, to you, and then you tap the phone on that. The beauty was they still in United States uses long wired POS devices, and that's where the guy had to hand his phone over to somebody else to actually make the payment, which is scary, right? We don't want to hand over our phone where we have those cards loaded. And the reality is, in United States, people still use check. We in South Africa have this generation I'm looking at, I don't think you've seen checks in your life, right? Yeah. I don't know, maybe, what is Harsha talking about? What is check? We don't know. So United States still use check. So we think that they figured it out, but they haven't. So what happened? We keep saying developing world, right? Consumers in Kenya, a country where there was comparatively very undeveloped infrastructure, got it right in 2007, while the people in New York, which is the financial capital, had to navigate through painful bank accounts and prohibitive fees. Why did USA not get it then? Because it was banking sector. The nice banks we have been talking about all this while in the talk, because banks didn't allow that. Because banks had legacy infrastructure, and legacy, when I say legacy, I'm talking mainframe. They still operate on mainframe. So banks had legacy infrastructure. They closed the ecosystem. It was very monopolistic. It's to earn the high fee. It's also Visa and MasterCard, the schemes, which actually close the ecosystem just why. And please, if there's anyone from Visa and MasterCard, excuse me. But this is the reality, guys. So they close the ecosystem so that external participants cannot come in and open it for market. And that's the reason why they still use checks, why they still are, the banking fees is very high. And why am I telling you US and why am I telling you Kenya? We live in South Africa, right? But South Africa has a very fundamental problem that we act in our banking and financial institution, we act like United States, but our majority of population is similar to Kenya. So we are living in a condition where we have to incur a very high fee, which most of us cannot afford. Majority of us cannot afford. Yet the banks have closed it all and are not ready to drop the fees. I don't know how many of you have heard PayShap. Please show of hands. Have you heard PayShap? Wow, I'm amazed. That feels so great that you have. So we were part of the industry which built PayShap. We built the infrastructure for banks. We built PayShap for some of the banks. And the idea was to have low-cost transactions or zero-cost transactions. When PayShap was supposed to launch, it was supposed to launch at zero cost. The interchange fee, which is a fee which banks basically pay to each other, was kept very low by BankServe. Yet the PayShap, one single PayShap transaction, if you go above 100 rands, cost you 7 rands at minimum. So it's a failed case. It's a failed case. It's like, why did we do this? Why did we incur such billions of rands to build an infrastructure, to build systems which were not fit for purpose? And I want to tell you like a little bit about the impact of payments on economy. So Kenya, when they got it right, in 5 years, 80% of population started using M-Pesa. Annual transfer value was about 50% of the country's GDP. Economic activity shifted from shadow to formal economy. I think our fellow colleague also mentioned that. Millions were able to access payments, savings and credit. So bringing payments into formal economy can actually open access to wide variety of financial services. It lifted significant amount of Kenyans out of extreme poverty, and Kenya became a success story on the world stage. So payments, what I want to say is, while payments just seems like a means to an end, we're like, payments, yeah, it's something which I do to buy something. It's not something which I happily do. Nobody does payments happily. It's money out of your pocket, right? While it seems like a means to an end, it has the power to craft destinies. It has the power to build economies. It can open door for lending, micro investment, small businesses. It can, if you get access to financial services, you can create a new class of entrepreneurs, businesses, consumers, and that's what we're looking at. So anyone who's actually in the payments ecosystem feel very proud that we always miss to see the bigger picture, that the country which we are making, or the economy which we are building, or the life we are changing, we actually miss out on that bigger picture, and we just focus on building systems. So I just want to emphasize publicize that, feel proud of yourself if you are working in the payment system. And Kenya was not the only country who got it right. There's so many more success stories. India, Brazil. I mean, the countries, the economies of countries are it's on the world stage. It's said that these countries are the fastest growing economies in the world, and it happened because of one of the fundamental factor which was put in place was digital payments. When your man on the street who's selling something as low as R1 is able to accept a payment on their mobile using that QR code, that's when you change lives. That's when you actually bring them in the financial ecosystem, and that's when things happen. And let's talk about South Africa. If we shift our focus to South Africa, we are banked yet financially excluded. The financial inclusion, it's a myth in South Africa. So we call ourselves that 80% of our population is banked, yet only 20% of population actually has access to financial services. So financial inclusion is a misunderstood concept in South Africa. We keep calling ourselves financially included, but financial inclusion truly only happens when you have access to financial services beyond just the mechanism to make payment or receive payment. And why? Why we don't have access to financial inclusion? I mean, because of our sophisticated, same problem which US faced, sophisticated banking system which attract high fees. I mean, it's funny that we hosted a round table very recently. Kuni was also part of it, and we brought in the execs from all the banks, and we brought in the execs from South African Reserve Bank, and we said, okay, let's chat. What's stopping you? And the kind of sentiments which you hear from banks is, I incurred 100 million rands to build this system. Who's going to pay for it? If Reserve Bank is not paying for it, I will ask consumer to pay for it. I'll ask fintechs to pay for it. So somebody has to foot the bill. The banks are actually working. They're not responsible for stakeholders. They are actually responsible for shareholders. So that's the reality, guys. And cash is free. So, and it's real-time exchange of tangible value. So why not use it? And the reason why, I mean, M-Pesa tried to come to South Africa as well, but we asked M-Pesa to please partner with banks to work here, and then that failed. Like, if you ask everyone to partner, fintechs to partner with banks, trust me, if you work in any fintech, you would realize, you would acknowledge, and you would feel the same sentiment that if you ask a fintech to partner with banks, how difficult it is to actually get into that ecosystem. So what is South Africa doing to change it? And I think the crux of my talk is this. So this is the most exciting part. It is where South Africa is changing and getting it right. In the mainstream, South African Reserve Bank has come to rescue. So yes, I'm not joking, South African Reserve Bank has come to rescue. South African Reserve Bank is creating a public digital payment infrastructure which essentially aims to modernize or broaden the ecosystem for non-bank participants as well. So today, as it stands, only designated clearing and settlement participants are allowed to transact in a payment ecosystem. In next 2 years, anyone can actually be part of that ecosystem and can do direct clearing, which is still okay, but hear me out, direct settlement as well with Reserve Bank money. So that is a big shift which is happening. So yes, while we are seeing open payments, while we are seeing mobile money and other things take up, South African Reserve Bank has also made an attempt to actually change the whole focus and say, this is not going to be monopolistic market. We are taking control, and we will be launching this public digital payment infrastructure in next 2 years. So there's 7 key foundation pillars to this public digital payment infrastructure. The first is a digital financial ID. What does it mean? You all have your ID cards. In South Africa, it's very common. Everybody has it. You will have a digital that ID card is useless. So we're going to replace South African Reserve Bank along with the DHA Department of Home Affairs is actually changing that whole digital ID. It is not going to be just a smart card for the namesake of smart card. It will be a digital ID which you can use to provide consent to anyone where you want to share your data. So it's like I, Harsha, want to share my data to, let's say, Ozo, so that Ozo can actually provide me access to multiple products. I can do it using, with a click of a minute, I can provide it in real time, that consent, and Ozo can access all my financial data, my bank's data, all my transaction history, my insurance history, even my discovery, for that matter, how I'm driving, to create a behavior profile of Harsha, so that they can actually give me the products which I need, or they can offer it to, Ozo can offer it to somebody else who's actually offering the products to me. So it's very much consent driven, and this work has already been started. So there's working groups which are set up in the industry where digital financial ID is becoming a reality. Second building block is fast payment system. So PayShap, we saw fast payment system, but PayShap from a technological standpoint is amazing. What PayShap doesn't cater to is commerciality, the economies of scale, and that's where South African Reserve Bank is saying, banks, you can keep charging. I will allow market players to come in and transact with real money and drive fees down. So now, if you want to charge, you will lose the significant portion of population, and then I will still charge. I will drive the whole market segment from banks to fintech providers. So fast payment system will be accessible. So that's like open payments, call it or not, will be accessible by fintechs. Interoperability. There's another working group which has been set up, which is driving QR code standardization. So we have seen SnapScan, and we have seen Zapper, and we have seen other providers who come in and launch their own QR code, but you can only use SnapScan QR code. You can only scan your SnapScan app to actually pay on SnapScan QR code. So it's very closed loop. South African Reserve Bank is driving another initiative where they are creating an interoperable QR code, so you can use any app, any bank, any fintech's app to actually scan that QR code and then make payment. Next one is fraud. So fraud currently sits very much in the realm of banks. Reserve Bank is bringing the fraud capability. Yes, do that thing, but because we are opening the ecosystem, fraud becomes very important factor to consider. They're bringing a fraud capability within central ecosystem as well. Accessible store of value. So that's very interesting probably for you guys, whoever wants to be entrepreneur. So now it's not only going to be bank accounts which are your accessible store of value, which are launched by only designated clearing and settlement participants. You can launch accessible store of value. You can create your wallet and you can participate in the ecosystem, and you can allow direct settlement. So doing real-time transfer of funds without actually going into open payments. Or I'm not saying that don't go into open payments, but if you want to still remain in the realm of a regulated sector, a very much mainstream sector, you can still do that with accessible store of value. Launch that accessible store of value with Reserve Bank and transact in Reserve Bank money. And then RTGS is real-time gross settlement. So basically what RTGS is, everything which we transact accumulates, and then banks actually make transfer using Reserve Bank system, which is your RTGS system. And RTGS system is also going through modernization. It's one, at least one thing we should be proud of in South Africa is our RTGS system is very solid. Hence, we don't lose a lot of funds in the banking sector. That's that's where we place our trust, but they loot us. Anyways, so our TGS system is also going through modernization, so that's also becoming a reality. And then last is education awareness, so there will be a committee which will be set up to spread education and awareness around this ecosystem. So I'm not saying that you can do whatever you want, whenever you want, and just come in and build store of value. I'm saying you will be able to build that, and by dealing with the right authorities. So South African Reserve Bank is asking everyone, whoever is interested, to come in and join that committee and be part of the change, which is inevitable, where banks are actually frowning today and sulking and trying to fathom the idea where the money is going to come from when they actually lose significant portion of customer base of the banking sector. Yeah, so I think that's all from my talk. Just watch this space. Payments are changing in the mainstream as well, so it's not so bad anymore. Thank you.